trade to get involved in. So when I'm looking at a momentum trade, for example, I'm looking at this bullish book here, and I'm looking at the bullish deltas here, and I'm saying, well, if I get a bullish book and bullish deltas, especially on a downtick, I'm going to smash it. As a local, I'm going to smash it, right? So for example, this candle here, this is where that trade took place. You can see the bullish book right there. You can see the book goes bullish, the deltas go bullish, and as a result, I'm going to smash this down candle right there. I'm going to smash it. I'm going to buy it as a local. And the takeaway was 1, 2, 3, 4 ticks. As a local, that's a really easy smash and grab trade that we can make a lot of money on. We've got the necessary down tick. We're getting the discount. We're getting the locals positioning. And the takeaway was 4 ticks, which was exactly what we were kind of looking for. Now, we want to try and trade this in the direction of the value that we've now established, don't we? So we want to try and be buyers in here. So the next opportunity to buy is a downtick when we've got a bullish delta and a bullish book, and that doesn't happen because when we get this one, for example, here, it's obviously on an up candle and we don't really get the downtick, and you can see that the downtick here could have given you a possible play on the long side, but we've got to just be patient with this. We've got to be, sometimes we're not going to get any particularly easy trades, and it's our choice whether we cross the spread, for example, here. That's a very easy opportunity to maybe snap up some downticks, but we don't get downticks. So we can stand with our hands in the air all we like. We can stand with our hands in the air all we like, but sometimes we ain't going to get the fill. We ain't going to get trading, right? You could say, well, what about a possible trade at this one here? We get a nice uptick in terms of this reversal here. We get an uptick in the deltas, an uptick in the book. And obviously, when we look at the candle, it's an upticking candle, but maybe you got filled because maybe you put your buy limits in there at 57s, and maybe on this occasion you did get filled. You wouldn't have got filled on any of the other ones, but maybe on this occasion at 57 you got filled across the spread here. And obviously the takeaway from that has been pretty good, has been a pretty good takeaway. Trading with the book, trading with the deltas is always a far better trade, always. That's why this is where the interns trades come from. The interns trades are supposed to ultimately evolve into the local, right? And the local waits to see the commercial, doesn't trade with the commercial, waits to see the commercial and trades away from the commercial in the direction of the prop, knowing that there isn't any commercial above them to trade into if they're buyers, or below them if they're trading into them as sellers, right? So the idea of this trade here is a perfect local scalp for that bit of business there. And I do occasionally like scalps. I do like trading as a scalper. I do like occasionally getting the sleeves rolled up and trying to find the perfect trade narrative and stuff like this. You can see this one here just happened. You can see obviously that very, very bearish toxic order flow came in here. And you can see that we got the book here and the deltas here both going negative. And obviously if I cast that up to the chart, you'll see that that's on a downtick. It's very difficult to get filled on that downtick unless you cross the Momo spread, right? But you can see the book was very bullish here. Then obviously my job is to then start investigating the possibility on these. When that goes bullish, for example, here, if I wanted to look at that and say, right, I want to try and find a down-ticking candle here, that's maybe not quite as difficult on this occasion, is it? It's maybe not quite as difficult just in there. You see what I mean? Because you could then have put in a buy limit order there, which you had 5, 10, 15, 20, 25 seconds to get filled, which then went for 1, 2, 3, 4, 5, 6, 7, 8 ticks to the upside. And you'd have made some nice money once all of the narratives had fitted in perfectly together in terms of that storyline. So you're not interested in this phase, you're interested in this phase when it goes green and green, right? That's the phase you're starting to become interested in. Well, the delta didn't go green on that one. That delta went green on this one. So you'd be interested in that phase, but the job of you at that stage is to try and get filled at 57 1/4. You don't want to start crossing the spreads. And if you get filled 57 and a quarter, you could have made 3 ticks before the market drops off here and scratches you out. But you're still looking at bullish trades at the moment. And based on bullish trades, you can now see that you now get another fill price just there. And this time you maybe got filled at 56 and 3/4, currently trading 57 and a half. And obviously that's your most recent order flow trade based on the toxic buyers coming in at low prices. So the only trade you're doing at the moment is a buy trade, right? So a lot of people look at that and say, where's the sell? Where's the sell? Where's the sell? There isn't a sell. It doesn't show up. The only reason we're doing this trade is because of the idea that we had the toxic buyer sitting on the books, sitting behind us. And then our job then is to either try and find when the book goes positive and we still get filled on the downtick. Now, if you mark off the candle, it gives you your price. Now, there's no reason why you can't cross spreads on these, but you're obviously giving away a tick really a lot of times for no reason, because you may well get filled on the downtick, but maybe you two lots and one is on the uptick and one's on the downtick. It's up to you, but that's what we're looking at. And at the moment, you can see that buy, worst case 57, best case 56 and 3/4, now trading at 59 and 3/4. The point to these trades is you'll do them often and regular and repeated, and sometimes you'll have a loss. But you can see that when you do have a loss, you're maybe losing 1 or 2 ticks. When you've got a profit, this could go on for $1,000. Ken Barabin? When you see some toxic flow coming back into the book, then you're obviously just going to use that to say, right, I'm going to take some profits on an uptick. Just take some profits. It's not big selling, it's just taking profits on upticks. And during that little phase, you say, right, I'm going to take some of this 60 just now, and I'll just wait to see what happens. Wait to see what happens. So you've just went 57s, the 60s for 3 points, 12 ticks, and it's taken you about a minute, 2 minutes. It's taken you about 2 minutes to make 3 points. $150 in 2 minutes is a pretty good return on your money, right? Most people will be quite happy with that type of return any day of the week. There's still quite heavy buying coming in behind this at the moment, guys. The buying that you're looking for is obviously this delta buyer coming in. They're still coming in quite hard and fast. In the book, it's kind of neutral just now behind it, but every now and then the book goes positive, and you can see the book's still positive. There's a little uptick here. We're not really bothered about this downtick. You would use that just to take some profits. Right? That's what I said, take some profits. The best way to analyze this is also to put one thing that's not on this chart, which I'll put on, is volume. Because with the volume on this chart, you'll start to see the candles that really should be paid attention to. We don't have volume on this chart. We don't have a volume indicator actually showing up. It's just got the delta volumes and the deltas. The deltas and the book volume, sorry. So we really want to put a volume indicator on that so we can really hone in on the individual candles that make an awful lot of sense. And that's scalping. That's all scalping stuff. I mean, you can see that those buys we talked about, there's been 3 of them in that little passage of play there. You can see they ended up doing pretty good business. There was one that got 3 ticks and a scratch. You maybe didn't make any money, but this buy here ended up with a decent little profit. This one scratched out. This one ended up with another decent profit, and it's taken from 1603 to the present moment at 69 to achieve that. You know what I mean? It's pretty good. It's pretty good. And we're now looking for the next significant change in any kind of commercial activity showing up, which we can eyeball. We can watch the deltas having whatever response the deltas have. We can watch the book. We can watch all these types of things evolving to see if anything shows up that's of any interest to us. And that's something we do want to pay attention to. But, you know, this type of trading, it requires that you literally sit on this screen from the cash open. And I think this is, you know, this is what was being, you know, I think it was maybe Jason earlier on was talking about, or Jack was talking about it. But somebody was talking about this idea that you focus in on a market. And the problem with that is that we've got traders who haven't got any interest in this market at all. So to focus on this for a whole day or for a whole week or something like that is going to take people and say, well, I need to know what's happening in oil. I need to know what's happening in natural gas. I need to know what's happening on such and such. And it's very difficult outside of a proper classroom setting to then do that. You know, but you can see that, you know, the ideas behind it are universal. The book ideas, you can see that price generally always goes in the direction of the book. Price generally always goes in the direction of deltas. Well, if you know that the price always generally always goes in the direction of the book and the deltas, well, that's the direction you should nearly always be going in, right? Is that not a universal truth for all the markets? The answer is yes, it is. Really, most markets is that you go where the best pressure is, where the asymmetrical pressure is evolving, is where you want to do your business. So, for example, when I see that the book is negative during this period and I see that the deltas are negative during this period, I want to predominantly be selling upticks. And that's a very, very simple basic trade. Now, how do you sell upticks? I gave a suggestion on this actually on oil, on how to trade without this process. And it was just a practice, and I don't know if anybody decided to do the practice, and it was sell 5 ticks, pullback, sell 5 ticks, pullback. You've probably heard me many times talking about a 3 tick back pressure. Sell 3 ticks back pressure. So what that means is that we're basically trailing the market with buy orders, the same way as you'll see on the book. And that's what, guess what this is here? See this here? What do you think that is? See this red line moving down here? What do you honestly think that is? It's exactly the same as what we're trading, right? We're trailing, see these book orders, because remember, these aren't fills. These candles are bid and ask depth candles, right? But we're trailing the market on like 3 tick back pressure. And we're basically trailing the price down with 3 tick back pressure. So when we do that, we'll generally do 3 or 4, depending upon how much value is in the trade, we'll generally do between, on the S&P, we'll generally do between 3 and 5 ticks back pressure, because it gives us as commercials time to see what the market maker is doing, who generally trade 1 to 3 ticks back pressure. Do you understand? A market maker will trade 1 to 3 ticks back pressure. We'll trade 3 to 5 ticks back pressure. So when you're looking at a sell trade, for example, for argument's sake, if we were looking at this, and obviously you can see it's nearly all selling and the delta selling, but when the market drops to a new low, and we'll obviously only be able to do this, but it is a 5-second chart, so it's pretty accurate. We'll go 1, 2, 3 ticks or more. The market maker will go 3. We'll normally go 4. So we'll normally start working 3s to 5s on a back pressure trade. So we'll sell this line here, and this line here, assuming we're bearish, and obviously that's the trade. When the price fails on this auction here, we'll sell on this line here, and this line here. And there's the sell trade there. Once, twice. Here's a trade that doesn't get filled, because on this back pressure here, we would have a sell order, for example, here, a sell order, for example, here, and a sell order, for example, here. Doesn't get filled. When this price is made here, 1, 2, 3 ticks. There's the market maker. There's us. There's us. There's your 3 ticks. When this price here gets filled here, we'll go 1, 2, 3, 4, and 5. So there's our fills. There's our fills. There's our fills. And obviously that's the takeaway from the trade. So you'll see that there's a sell order here, there's a sell order here, there was a possible sell order here, there was definitely a lot of opportunities to sell into this one. If we were still bearish, and the takeaway from those trades has been enormous, obviously, by just doing that 3-tick back pressure. You can see there's 1, 2, 3 ticks. There's the market maker's level there. There's 1, 2, 3 ticks. There's the market maker level there. There's 1, 2, 3 ticks, 4 ticks, and 5 ticks. And then the price rotates. And you can see, obviously, there's a lot of possible commercial toxic buyers coming in. And we know where the toxic buyers will be located. But once we've located a toxic buyer, what are we then expecting? Well, we expect the book to change. So when we get a toxic buyer coming in here, for example, and then we see positive deltas, for example, here and positive order flow, then obviously at that stage it turns into a Momo trade. They go in buying orders here and here. We cancel these sell orders and we don't take the sell orders. We get rid of the sell orders and we flip the book into a buy. And we start working the toxic buying coming away from this on the back of the trade here. So obviously you would have been looking at this and saying, right, 1, 2, 3 ticks. There's the trade here, 3 ticks, 3 ticks, 3 ticks, 4 ticks, 5 ticks. There's the trade there, bullish. You see it? Now, this all depends upon one other thing. It all depends on the value. It doesn't just live in isolation to the value, and there's no buy trade, by the way, for me on this chart, and the reason for that is because this is the overriding driver. I'm not buying this. There's no way I can buy this at this point because everything's selling. So I'm preferring to try and work back onto the short side of this trade, not the buy side. So I don't care if we see commercial toxic buyers coming in, because that could simply be what? Profit taking, right? What I do want to see is I want to try and see some book opportunities to get back into the short side of this trade as quickly as possible. And obviously when you see that, you're starting to look for the momentum shifts on the the sell side, which means a down candle, solid enough down candle with down deltas, which happens there. So we can obviously go into the book at that stage and say, right, I'm going to start putting in some sell orders at this price at 26s to try and take advantage of the move to the downside during that process. And from that point onwards, you can obviously work out whether you're going to stick with the trade or get rid of the trade or whatever you want to do with the trade, depending upon whether the value is bearish. And you can see that got you in at around about 56 on the short trade, which is absolutely perfect because that was that little green up candle. That 56 short trade was right there. Right there. There's 56 right there. That little 56 candle there was that short trade, and that was the outcome from that trade down to 52 3/4. So this can't live in isolation is what I'm saying. This here can't live in isolation from this, can it? It can't live in isolation from this. You've got to try and figure out what you're wanting to see on order flow, because if you don't know what it is you want to see on order flow, you end up getting paralysis by analysis because there's so much stuff to see on order flow, right? There's buys, there's sells, there's profit taking, there's surges in volumes. You know what I mean? If you look at the order flow on a 5-second chart or a 30-second chart or a 1-minute chart, which of these are significant? Obviously, there's going to be some significant order flow. You can see there certainly seemed to be some sort of macro spoofing coming in here. Definitely seemed to be some sort of macro spoofing on this red candle here. You can see that the inside market went very bullish, but the bigger market was very bearish. And then shortly afterwards, the market maker toxicity seemed to appear here. So we could obviously start reading that candle as a very, very bearish type candle. And obviously that's the level that's been generated as a possible short trade. But it's about then understanding that that is a good enough opportunity on that level 2 there. You can see that it goes 2 ticks through a level and then sells off, and it's sold off quite nicely since then. You can see in sense that that's probably right, but that was based on this information in the background. But equally, there's lots of bullish information every few seconds. You can see the book goes incredibly bullish here. The book goes incredibly bullish. The deltas are no longer really bearish. The toxicity kind of starts to slowly turn around here. And obviously that reveals a possible bottom edge. But what is that bottom edge? Why would there be a bottom edge at that point on the screens? Maybe the value is not improved. Maybe the value is completely reversed. Perhaps nothing. Perhaps there's nothing that you can lean against to say, that's my trade. That's definitely going to be a buy trade. But what I start looking for is I start looking for perhaps some sort of evidence of a spoof. And the evidence of a spoof started to show up on this candle here. You'll see if I look at the book candle here against the evidence of a spoof, there's a possible big commercial spoof coming in here. I know spoof's illegal and all that kind of stuff, but it's the process, guys, right? We're not talking about an illegal operation here. We can see the short term versus the long term. We could obviously start thinking about, because we can see the toxicity turning up, the value was behind that. That's the type of spoof I'm interested in, perhaps, if it's a big commercial trade. And therefore, being able to buy into that downtick phase there could have become a doable proposition if you were watching that in real time. You can see that this is a very, very similar candle, look. But the toxicity kicked off bullish before that candle took place. You see that? So you can see that it's, you know, you can see why this is a very, very kind of bullish looking spoof for commercials. But that's in the wrong place for commercials, isn't it? That's completely in the wrong place for commercials. Because commercials should operate in these areas, shouldn't they? Not up here. So when you're looking at that and say, but that's a spoof, right? What happened to that? It topped out the market. That was the top of the market because that's in the wrong place for that commercial order. So without knowing and understanding, you know, things like structure to where these commercial orders are taking place, you're not going to start to understand this at all. You're not going to really kind of get this process, are you? You're going to kind of look at it and say, what the hell am I seeing? I don't know if this is bullish. I don't know if it's bearish. Because you saw another one just there, look. See that big up candle? See that there? Perhaps some spoofing. Perhaps some spoofing. And you can see that ultimately the spoofing, perhaps some spoofing. And you can see that ultimately the spoofing's successful because obviously the idea of spoofing is what? What's the idea of this spoof? It's the same basic idea as this spoof. The idea of this spoof is to try and get people to sell so that the buyers can come in. The idea of this spoof is to try and get people to sell so the buyers can come in. Unfortunately, on this occasion, the sellers came in hard right there. And if you look at that candle itself, that's almost an exact opposite. Look at the candle against the inside market. Look, see the inside market on this occasion? It's the exact opposite. The inside is very bullish, but that's starting to show up as a bearish candle here. And that's telling us that this could actually be a possible top edge. But if we had toxic order flow there and we had short value, that could become a very reasonable trade. And it never showed up. The toxic order flow never showed up with any type of, you know, we actually got a positive boost on the toxic order flow, which isn't in the right place, is it? It's not in the right place. And that's why that irregularity is something that we have to pay attention to. We have to try and figure out, well, why did it not do it? What was the reason why we didn't get the right information at that point for that sell trade? What can we do about that? Sometimes there's nothing we can do about it. It's just said there wasn't any toxic order flow. And the price obviously comes down. And in line with that toxic buyer that's coming in, we look for that buyer. And perhaps these spoof orders were very successful. Our job now is to try and pick up the trade at these lower prints and try and put the deltas in our favor, try and put the book in our favor. The first time the candle really gives us a positive delta and a positive book is probably on this candle here. And obviously at that stage we can start saying, right, I'm going to put in some orders here to try and capture the bottom edge and see what happens. And obviously the takeaway from that was okay. It wasn't exactly sensational. It was a decent little takeaway. But order flow is a funny old creature because you can spend your whole life looking and staring at order flow, which can be a great exercise for a lot of people, but can drive you stir crazy if you're not knowing what you're looking for. Oil's had a great sell-off, guys. We've went 51.50s to 50.50s. Who was on board? I did shout this oil trade, by the way, guys, for anybody that's just came into the room. When we were talking about this trade, we were actually highlighting this narrative here at 51.68s and 51.40s. We were talking about that narrative for the short side of the oil, and that short side of the oil was all these arrows, the top edge arrow, and then these arrows, and that gave us that perfect level for a $1,000 sell-off. $1,000 sell-off. It was a brilliant trade, guys. It was a brilliant trade. So well done if you were on board with us on it. I like your stuff. $51.50, great place to book, great place to finish up, great place to say enough, thank you very much, and a great place to walk away from the trade. I want to talk about oil, so let's take a little break, and when we come back, we'll get tucked into this. We'll turn this trade into something a little bit more interesting when we come back in just a few minutes. Take a couple of minutes, guys.